So, you're a dividend lover. I'm not judging. But if you are, just please promise me one thing, okay? Don't tell your grandma. Okay, weird old Korean joke aside, let's talk dividends. You see company after company issuing dividends and some people think it sucks because they don't have them. Why am I telling you this now? Well, so you're ready for the good stuff that is to come. Turn up your speakers and watch this video till the end, as I tell you my 7 reasons why investors love dividends. One of the best reasons to invest in stocks is that dividends are always guaranteed when selecting dividend aristocrats. Surveys show 97% of investors would recommend a stock because of the company's dividend, and 95% would recommend it because of its growth potential. Whether you want to retire or if you want a big income, stocks are definitely worth your investment. But don't just take the decision. Take a toll on the factors that jolt the big investors for their love for dividends, and see for yourself the mind game behind the rich investors. Big investment firms love also dividends, and they can be great for everyday investors looking to buy shares. So, let me show you the 7 reasons why retail investors and professional investors love dividends. Number 1, it's easy to understand. A company makes a profit. It plows some of that money back into its business, and it sends the rest to shareholders in the form of a dividend. Simple, right? But here's the best part. A well-run company that reinvests in its business will, over time, generate higher profits and pay bigger dividends, both of which will be reflected in a higher share price. So, in addition to enjoying a rising income, dividend investors benefit from capital growth as well, which is like twice the advantages of a plain old investment. No wonder why investors are capturing every part of it. Number 2, it has produced superior returns. One of the primary benefits of investing in dividend-paying companies is dividends tend to grow steadily over time. Well-established companies that pay dividends typically increase their dividend payouts from year to year. There are a number of dividend aristocrats, or companies that have continuously increased their dividend payouts for more than 25 years consecutively. Over the last 10 years, the compounded annual growth rate of the total return for S&P Global Dividend Aristocrats was 2.72%. And what's more thrilling to investors than returns that multiply every year? We don't know. Number 3, dividends help you stay out of trouble. It isn't necessarily the dividend, per se, that makes a stock attractive. Rather, it's the fact that dividend-paying businesses tend to share certain desirable attributes. Dividend-paying companies are typically well-established, soundly managed companies with stable businesses, as per a study. There are exceptions, of course. Occasionally a dividend-paying company will suffer a serious downturn in its business and have to chop its payout, but a cut is a rare event for conservative dividend stocks such as utilities, power producers, banks, and telecoms. Trust me, if you know a serious investor, then you will have an idea how reluctant they are to risky investments, so staying in trouble can be a contributing factor for investors taking part in the dividend cycle. Number 4, dividends are stable. Are you asking if investors prefer stability over volatility? The answer is obvious. The stability. Stock prices constantly bounce up and down, but dividend payments are much more stable and predictable. What's more, according to some studies, dividend stocks exhibit lower price volatility than non-dividend payers. So, if you're looking for a smoother ride, focus on dividends. And if you are liking the video, don't forget to give us a thumbs up. Number 5, dividends offer tax advantages. We all are afraid of high tax rates, and so are the investors. There is no denying that dividends offer tax advantages to investors like no other investment. The way dividends are treated in regard to taxes makes dividends a very tax-efficient means of obtaining income. Qualified dividends are taxed at substantially lower rates than ordinary income. As per the IRS, for individuals whose ordinary income tax rate is in the highest brackets, 35% or 37%, qualified dividends are taxed at only a 20% rate. And for individuals whose ordinary income tax rate is below 12% to 35%, qualified dividends are taxed at 15%, and for those in the 10% or 12% tax brackets, they pay no tax on qualified dividends. Number 6. Dividends preserve purchasing power of capital. Dividends also help out in another area that investors sometimes fail to consider: the effect of inflation on investment returns. For an investor to realize any genuine net gain from an investment, the investment must first provide enough of a return to overcome the loss of purchasing power that results from inflation. If an investor owns a stock that increases in price 3% over the course of a year, but inflation is at 4%, then in terms of the purchasing power of their capital, the investor has actually suffered a 1% loss. However, if that same stock that increased 3% in price also offers a 3% dividend yield, the investment has successfully returned a profit that outpaces inflation and represents an actual gain in purchasing power for the investor. The good news for investors in dividend-paying companies is that many dividend yields outpace inflation. Number 7. Dividend yields can tell you of the overall market sentiment. People are always asking, where's the market heading? The only thing we know for sure is that the market tends to rise over the long run, but in the short run it is completely unpredictable. A better question to ask is, where is my portfolio's income heading? If you own high-quality companies that raise their dividends regularly, your income should continue to grow during bull markets, bear markets, and sideways markets. But these are not the only factors why investors are drooling over dividends. Let's sneak peek into the 2 most common reasons why, for investors, dividends are a dream. But before we hit the spot, let's not forget to subscribe to this channel for more such informational content. So, the first most common reason is that dividends provide a steady income stream. See, one of the main reasons investors love dividends is that they provide a steadier income stream than other investments. For example, if you invest in a stock that doesn't pay dividends, your only source of income from that investment will be if you sell it for more than you paid for it. However, with a dividend-paying stock, you'll receive regular payments even if the stock price doesn't go up. This is the ultimate reason for investors to be inclined towards the love of dividends. As we all know, investors love some extra cash down the road of the investment. And the second reason is that they help investors reach financial goals. Finally, another reason investors love dividends is that they can help investors reach their financial goals faster. For example, if an investor is saving for retirement, reinvesting their dividend payments can help them reach their goals sooner. Dividends can also be used to generate income during retirement or to fund other financial goals, such as buying a house or starting a business. To close off, we all know that investors love receiving dividends. Who doesn't, right? But beyond the cash and passive income you receive, dividends are also a nifty way to examine a company's true financial footing and the overall market sentiment of a sector. Use them to complement your research and analysis. Recommendations for people looking to invest specifically in dividend-paying shares. Now you should know all the basics about the right investment. If yes, then please don't forget to divide your likes and subscribe. And for more real reasons on how to invest and what to ponder upon, don't forget to hit the bell icon.